What's the difference between a pin bar and a hanging man candle formation, and how can they help you to increase your performance as a Forex trader? Let's get into that and more right now. Hey traders, Andrew Mitchem here at the Forex Trading Coach with video and podcast number 529. Now, I want to talk about two candle patterns that often cause confusion for people. And one is a pin bar and the other is a hanging man. And for a lot of people, they kind of look the same and they don't quite understand how to use them and what's actually happening behind the scenes in the market conditions to create those patterns within your charts. It's important to note also that I do not trade a pin bar or a hanging man purely as a candle pattern. However, they can be really influential in my trading because they give me an early warning system, or they give me a clue as to a potential change of direction. So if I'm not in a trade, they can give me the clue that, hey, look, the market may be just stalling here or potentially changing direction. I still need confirmation after the pin bar or the hanging man. The other scenario is if I'm already in a trade and I see a pin bar or a hanging man pattern show on the chart, but I haven't quite reached my profit target yet. So what that's telling me is, hey, look, this could be a really good opportunity now to potentially look at closing some of the trade or exiting in total the entire position early because we could now be getting a change in direction against where we're looking for the trade to move. So what is a pin bar? What is a hanging man pattern? Well, basically, to me, they both are indecision candles. They tell me there's a lot of movement in the market, but the market's not quite decided which way it's heading. So let's use an uptrend as an example. If the market's currently in a really good strong uptrend and we see a pin bar show, a pin bar will be a candle with a small body but a long upper wick. Now what that means is that the uptrend has continued and it's gone really strongly upwards, and at some stage during that candle's formation that would have been a good strong bullish candle. However, before the candle is closed, the price has come all the way back down to either just above its open or even potentially just below its open price, and it's formed that small body but with a long upper wick in an uptrend. So that tells me that the price is exhausted. It may have hit a certain level, and now the sellers are starting to push the market down. I still need a confirmation candle to come next, so an outside bar or an engulfing bar, probably an engulfing bar in that scenario, to suggest that yes, the downtrend is about to then be strong enough to justify a trade. If we use that same bullish uptrend, but instead of the pin bar, we get a hanging man pattern. That means that we get a small body near the top of the candle, yet a long lower wick. What that tells me is that the price has moved up, and then when the hanging man pattern is formed, during that candle's formation, the sellers really took over and pushed the price down. However, by the close of the candle, the price had retraced back up again and the buyers were still pushing it higher. And that could be a close higher or it could be a close lower than the open. But in general, it's like a small body of the candle near the high of the candle and a long lower wick. So that tells me again there's a bit of indecision. The sellers have taken over, the buyers have pulled back, but there are certainly sellers in the market. Again, I need confirmation with an engulfing candle or an outside candle next to confirm that the downtrend really is in play. So two different ways you can trade there, both in an uptrend scenario, and both the pin bar and the hanging man give two different types of ideas of what's happening in the market, but they give us that early warning that the trend may be starting to turn downwards. So that's how you use them. If you'd like to find out more about how we use them in detail and in what context, in what part of the chart, the other things we look at as well, the round numbers, the trendline break, all those type of things. Have a look at the link here below, and I'll put a link to my masterclass where you can jump on to an hour-long session. If you'd like to talk to us personally about how we trade and how we can help you, I'll put a link to so you can call or book a call with one of us as well. And if you're out there looking for a fantastic broker, I can highly recommend Blueberry Markets. I'll put a link to them as well. They offer the MT4 and the MT5 trading platform, and they're just a great bunch of people. Incredible customer support, and I've been with them for years and years, and hundreds of my clients use them as well. We always get amazing feedback from Blueberry Markets. So I hope that helps. That's today's lesson about hanging man candles, about the pin bar candles, how you can use them. Book a call or jump onto the Masterclass free webinar to find out more about how we use them and how we can help you to use them to be a profitable trader. This is Andrew Mitchem at the Forex Trading Coach. I'll see you this time next week with another video and podcast. Bye for now.